Welcome back. Well, in our study of economic numbers, in our efforts to judge the economy, we typically take a look at the numbers released by, official agencies, the Bureau of Labor Statistics, for example. If we're looking at jobs numbers, well, there's a lot of private sector sources of data that also can provide some pretty interesting insight. Today, we're going to take a look at Indeed.com, the employment website. And we're going to take a look at all the job postings, the data, to determine what are the best states and the best industries. I'm going to jump right into the data we see here. Well, there's 50 different lines. Each line represents a different state going back to 2020. And by the way, this data, the way it was calculated, was zeroed out at 100 as of February 2020. So indications below 100 indicate a weakening job situation. Above 100 indicates a strengthening. The different lines show us the different states and their respective frequency of job postings. Which states have the greatest number of job postings? The black line at the bottom represents the spread, the difference between the highest line and the lowest line. And I think what's interesting is that this spread continues to rise over time, meaning there's a greater variance between the states with the greatest amount of job postings and the states with the least amount of job postings. Well, let's cut to the chase. The top 10 states with the greatest amount of job postings, the frequency of job postings on Indeed.com are North Dakota, West Virginia, Wyoming, South Dakota, Maine, Vermont, Montana, New Hampshire, Alaska, and Arizona, which we can see with a dark black line, the thick black line, that's the state average. So they're all above the state average. These are the top 10 states. The bottom 10 states are as follows: Minnesota, Indiana, Washington, Massachusetts, Illinois, New York, Virginia, New Jersey, Maryland, California, and the big black line again is the state average. So these are the bottom 10 states with the least amount, the smallest frequency of job postings currently on Indeed. What's also interesting is to see how this line peaked about 2022, about a year ago, and since then it looks like it's moving lower. What happened in mid 2022? The beginning of the inverted bond market. We've spoken about this quite a lot. It's not just a phenomenon that occurs within the fixed income market, but it's also a reflection of the overall economy. And we can see that the numbers really started to decline following the inversion of the bond market. Now, take a look at the Indeed job postings by industry. You see, it breaks down the different industries that are represented on the job postings on Indeed.com. And we can see again, this peaked the beginning of 2022. And since then, it looks like it's trended lower, but the black thick line shows us a spread, the difference, the variance between the highest line, the best industries, and the lowest line, the worst industries. And we can see that the spread is at the highest level, meaning it really does matter which industry we're in to see a greater or lesser amount of demand for employment. Well, these are the top 10 industries: physicians and surgeons, civil engineering, therapy, dental, personal care and home health, driving, medical related, pharmacy, veterinary, child care. Notice what's interesting is that medical services seems to play a dominant role within the top 10 industries. Physicians and surgeons, therapy, dental, personal care and home health, medical related, pharmacy, veterinary, well, that's similar, child care, similar as well. The top 10 industries seem to be very heavily weighted towards healthcare. The bottom 10 industries include banking and finance, hospitality and tourism, beauty, wellness, sales, IT operations, media and communications, marketing, mathematics, information design and documentation, and software development. Now, some of these we could extrapolate that maybe the advent of AI is going to change certain industries like software development, information design and documentation, but maybe that's a little early in the game. We haven't yet seen a big, massive replacement due to AI. But there seems to be also a theme that these bottom 10 industries, some of them are related to disposable income, extra money that we may or may not have, hospitality and tourism. Can't take a vacation if we don't have extra money. Beauty and wellness, Marketing, well, maybe not so much. Media and communications. It seems that to some extent, disposable income is linked to the bottom 10 industries. Now we see, if you're curious, the link, the relationship, or the correlation between Indeed job postings and our standard non-farm payroll that we see every single month. Now we take a look at non-farm payroll that shows us the amount of new jobs created in the private sector every month. We take a year-over-year approach, just compares this August to last August, so on and so forth. And we see that's the red line, non-farm payroll, and the purple line is the Indeed state average, a very, very close correlation. We can see that both lines are moving down pretty much at the same clip. It's actually quite surprising how similar these lines are. With that said, take a look at the Indeed state average in purple versus the S&P 500 in orange. Also, surprisingly, a rather strong correlation. We would assume there would be a correlation. After all, when there's a great amount of job postings, it reflects a strong economy, an economy, where there's more employers out there looking for more employees, and maybe all salaries are all going up as well, and that, speak to a strong economy and better jobs and better corporate earnings, and stocks go up. Well, it seems that both lines kind of peaked around the end of 2021, early 22, and then since then have gone lower. Notice we see here that the stock market really has been, relatively speaking, more resilient than the Indeed state average has been. Maybe the weakness in the stock market recently is showing us a little bit of a return to normalcy, regression to the mean, in the sense that there's fewer amount of job postings and now stocks are starting to reflect that. So we're going to keep an eye on this as well as the non-farm payrolls and our other barometers of employment and look for any significant changes along the way. And we'll be sure to report them here as well. We hope this has been helpful. We look forward to seeing you back soon.